Before we get started, a quick word from our sponsor, Community Financial's President CEO Tansley Stern's podcast, Despite Impossible. Now on to the show. On the show today, we have Janusea's very own Kyle Stutzman. He's here talking about the recent Synapse collapse and how it relates to credit, or what credit unions can learn from it as far as regulatory questions, risk, vendor relationships. We cover it all, so check it out. Mike Lawson here with CU Broadcast. Welcome back to our show. And on today's program, look who is in our virtual studios, Mr. Kyle Stutzman from Janusea. How are you, Kyle?
Doing great, Mike.
I almost said Kyle Janusea from Stutzman, but I held back. I caught myself.
One of those days, right? We already have
one of those
tongue
days.
Twisters are all about us.
Kind of recovering from a cold here, so I apologize for my absent-mindedness, but we're off to a good start already. How are you, sir? Good to see you as well.
I'm doing well. Doing well. Yes,
Good.
The summer has treated me well. I'm sure, hopefully everyone's going to come back from vacations at all our institutions, and we'll be full steam ahead, Q3 and Q4. But
In the fall,
yeah, it's been an interesting summer.
No doubt. It is an interesting summer, which we'll leave all that stuff. I think
there's a lot to talk
we're
about.
talking about. We'll leave that to another
show.
show because we could get going on a rabbit hole on that one for sure. But you want to talk about some regulatory questions, risks with vendor relationships, all based kind of on the recent Synapse collapse. And who doesn't like saying that 3 times as an example? So right. You want to kind of lay the foundation here real quickly, Kyle, and we'll dive into a couple of details.
Yeah, that'd be great. I've already gotten a number of questions, both from other fintechs as well as financial institutions, credit unions that are saying, "Have you heard about this? Is that like what you do at Janusea? Is that like what some of your
really?
partners do that use Janusea?" And ultimately, our regulators, if they don't already know about this, someone's going to bring it up to them,
For sure.
and they're going to be asking more questions about our fintech relationships. So it's kind of a nice example for us to talk through, so we can learn a little bit about what different types of fintechs are, where those risk factors are, and we'll use Synapse specifically to say how they were a different type of business than what most of our credit unions engage with when they talk about working with a fintech.
And then obviously to address this, to avoid something like that happening, right? So
Yes.
yeah. Okay.
Well, Let's start with Synapse. I mean,
Give us a quick refresher.
They've been talked about as a fintech. They've been talked about as potential middleware.
Yeah.
They've been used the language of banking as a service. So it's, kind of everything's been thrown out there in the news about who this is and their collapse. And that's really interesting, not only in our industry, but for our members and, our regulatory bodies too, have to digest this and understand what it is. So probably the best example of Synapse is that they were a banking as a service vendor, right? They were a company that said, if we work with some banks, which was the case, mainly they worked with Evolve, but if they worked with a few banks, and then they provided banking services to other fintechs, so that small little apps or other companies could interact with banking services, but not actually directly with the bank. And that's kind of where we get into this risk factor.
Yeah,
but that was their business. They're like, we're gonna work with the bank, and we have the partnership, and now you can talk to us, and we'll provide you all these banking services.
Really? Is that kind of like, it just came to my mind, kind of like the Apple Card with Goldman Sachs? I mean, I know it's kind of a distant connection, but that's kind of what I equate it with, because obviously Apple is a technology company. They're doing fintech-ish things, especially with their Apple Card and Apple Pay and all that type of stuff. But they have this back door or back office relationship with Goldman Sachs, so which is the foundation for their card, right? So it's, I know it's not exactly
a small part of it would be exactly that, in the sense that Evolve would have issued the debit card, right? Evolve would have issued the credit card if it was offered, but I think it was debit cards mostly. They would have issued that because you have to have an issuing bank. But here's one gotcha that's come up in the conversations, and think about it from our members for NCUA or FDIC insurance. What does it mean for the NCUA, for it to be NCUA insured or FDIC insured? So there were fintechs that were working with Synapse that advertised, we are FDIC insured, your deposits are FDIC insured.
A fintech was saying that?
A fintech was saying that, right. Now, logic, like if you actually say, if you take money and deposit it at a bank, is it insured?
Well, you better make sure it's FDIC
Right.
insured.
Yeah.
Yeah.
Yeah. So it is. But if I take your money, Mike,
Yeah.
and I happen to be Synapse, so
Yeah.
we're working together. I take
Right.
your money
Right.
and then I work through Synapse, and Synapse keeps your ledger balance. And then Synapse takes and pulls the money together and puts it all at a bank, and they have one big account with, millions of dollars in it.
Right.
Um, or doing business, for the benefit of or other accounts. Is your money insured is becomes the real challenge here. So what happened in this situation is the relationship with the bank and Synapse started to fall apart.
Mhm.
Synapse also started to ask about balances. The bank had balances, Synapse had balances. They didn't match up.
Oh gosh.
And ultimately, accounts were frozen. A bunch of consumers, which it's at least in the hundred thousands, if not in the millions, didn't have access to any of their money or their accounts.
Hmm.
And the question is, who actually has their accounts? They may not actually have an account at the bank. They might have only had an account with the fintech they were working
Oh
with, who
my God.
happened to be using the gateway. So there is the potential that there's millions of dollars missing. And what do our regulators say in this situation? The financial institution's healthy. It didn't fail.
Right.
There's no problem there.
Right.
In fact, they have records and balances and money comes in and out. They're saying we're fine, right?
Right.
Evolve Bank is saying we're fine. We don't have any issues. But yet all the people who are working with Synapse are wondering how do they get access to their money?
Yeah.
And last I understood earlier this month, there was still over 100 million that was frozen,
Oh my.
and there's somewhere in the 30 to 90 million that is unaccounted for, where they don't know, is it at a different bank because it ends up that Synapse worked with multiple banks,
Mhm.
or was it ledger balance issues at fintech level and the money doesn't actually exist somewhere. So it's quite complicated and quite a mess for everyone. And people are looking at the bank saying, well, my understanding is that all the fintech was working with the bank. So
Right.
why
Right.
don't you help me out?
Yeah.
Right?
Exactly.
That's what they're saying. Yeah.
Well, that seems logical. If you want to get these people's money back, right?
Right. But
So,
if the bank was working with the fintech and the ledgers were not really theirs, it's a different situation. So this
oh,
leads us to, okay, an examiner brings it up with you, somebody in our regulatory agency brings it up with a leader at one of our credit unions.
yeah.
It's a different situation than what we often work with. So when
Mhm.
we have credit unions working with fintechs, especially all those that Janusea is working with, they're working directly. They have a contract at the fintech and a contract with the credit union. It's their
Mhm.
relationship
Mhm.
between that. And they are putting accounts and balances in and out of the institution. They're not usually, managing their own ledger balance and then just have some big bulk amount of money at an institution. So understanding how your fintech is actually working, which when you have the direct relationship, that's step one, right? If you're working with a fintech, it's good to have that direct contract so
Mm.
that you know exactly the situation and
Yeah.
how they function. And in most cases, then it's nice to know too, where is that money flowing, that you
Mhm.
actually get the members. I think 99% of the fintechs I know working in our industry are doing that. They're partnering with credit unions.
Mhm.
They're putting real accounts on the actual core and reading and working with that as opposed to trying to work with their own ledger balances.
Mhm. Mhm.
So you have to work with fintechs that actually understand our industry, understand the regulatory compliance and issues that can come up, and then make sure that it's structured so that you understand how money flows. Just as important, they talk about the innovation that they're doing,
Right.
but you can't be in that situation sitting across from an examiner and not know who the in person is that you're serving, who that
Right.
in member is. In our case, it's actually more important because we have to know that the members are eligible for our credit unions.
Right. Right.
Um, in a banking world, I think there's a number of articles that say they could have got themselves in trouble where they were even serving people that could be outside of the continental US. That, I mean, fintechs were offering the services, and so
Yeah.
they may have not even known who that end customer was. They were just receiving deposits.
Okay. Okay. So what's the
Yeah.
what's the big lesson here for credit unions? Obviously, vendor due diligence? Is that one of them, or am
It
I going
is,
down
but
the wrong road
it's
here?
no, I think that's perfectly it. Vendor due diligence, that's been a focus, but what's going to come up is that vendor due diligence, it's not as simple as first party, second party. I mean, really, vendor due diligence is making sure you're working with, especially when you come to the fintech world, working with fintechs that understand our banking systems, and
Yeah.
you're actually talking with each other, understanding the regulatory requirements, and then understanding enough about the fintech's business to know what they're doing. You know, a new account opening that is opening accounts on your core is a lot easier to draw out a logical diagram or
Mhm.
connect the dots that
Mhm.
say this is what they're doing, right?
Mhm.
They're getting this data and they're putting it into my system, is very different than a system that, you know, here's a fintech that just wants to put their balances on my books,
Mhm.
and then you don't really know what they're doing in the front end.
Yeah.
And if they're using your name or saying you're their sponsor credit union, you effectively are connected to them. And so you need to ask enough questions working with fintechs
Sure.
to understand their acumen in their industry. What do they know about our industry? What do they know about the regulatory? How much are they willing to learn, and be transparent and disclose how their business functions? And ultimately, I think we're looking for those fintechs that expand what a credit union does. It doesn't, the lesson here is not to go back into our traditional way of banking and say that no fintechs offer any value. The lesson here is understand what the fintech's value is and how they function.
Yeah.
And if they're really partnering with you, you own that relationship with the member, you own those accounts,
Mhm.
you have that connection with
Mhm.
the whole process, as opposed to what was happening with Synapse, where they were basically fronting banking services and then just using the bank as kind of a back end
Yeah.
GL.
Yeah.
Yeah.
Is there any of that going on in the credit union industry? I mean, pardon my ignorance, but I should know this. But
um,
is there
the,
a similar organization like Synapse working in the credit, doing something similar like Synapse?
Not to that degree,
Okay.
but that doesn't mean we
I
shouldn't
don't want to
keep
name
asking.
names, but I'm
I
just,
don't want to call people, yeah, I don't want to call people out, right?
yeah,
But
yeah.
so in our industry, like I said, 99% of them are actually trying to work directly with our systems and our, there are some that are in the fintech world that come to us, and here's one of the examples. When they say we're just going to be a branded solution for you, a co-branded solution, right?
Mhm.
We're providing all the services, and you guys just, we're just going to be, you know, offering that to your members. You need to understand what their business is, what the risk factors are, because there are some systems where they're saying we're going to provide all of this and it's not connected directly to any of your systems you have control over, and therefore you don't necessarily own the account, you don't own the relationships.
Right.
And there are some situations like that where vendors will offer those services, and they can be, you know, they can be quite well funded, they can be well-known brands, but that doesn't mean that they're necessarily risk-free just
Right.
because now it's not a, you know, not connected to your system. You actually have this sort of risk presented to yourself. They're now holding ledgers, account information, and yet, you know, you're involved in it because you're helping offer it to your members.
Well, yeah, no, oh, great segue, because now I'm thinking about the member and the
Yeah.
risk to the member. So how much due diligence should the member, how much is this is on the member being educated in this area as well? I mean, obviously
Yeah.
a lot on the credit union side, since they're using the fintech, you want to educate your member on this type of stuff, but how much due diligence or how much responsibility is on the member side?
Yeah, well, there's 100,000 plus members learning what it means to be
Yeah, I know
FDIC insured
exactly.
right now, right?
Yes.
Um,
Very
so
unfortunate.
part of it is on our members to learn, but the challenge that we have is there is a whole bunch out of our control.
Okay.
So we, you know, plaids in our industry, we can talk about them in a broad sense,
Mhm.
but our members will go onto apps and they will sign up for a service, log into our digital platforms, our
Mhm.
credit union digital platforms. And what they're doing is giving their credentials to Plaid, who is so far has been
I use Plaid.
generally trustworthy with doing that. And then Plaid's going in and getting basic access to, you know, account data in
Mhm.
order to help provide some services. So our members are already doing it, but that's very different than us enabling it, sponsoring it, you know, taking a active role in that process. by bringing a fintech on. So I think the due diligence is much more shared on our side, but we should obviously be educating because FDIC or NCUA insurance in our case is very important for people to understand what's covered and what's not, how accounts function, and whether you really are a member of a credit union or not, which in our cases, I think, as I said, it's less of an issue, but fintechs, that word gets thrown around all over the place. Middleware gets thrown around all the time of what that means. And so understanding banking as a service can be a pretty broad concept. Something that extends our services but still use our accounts can be very healthy, can be very helpful to us. So anyway, just wanted to at least bring up the topic in case it gives some better discussion in our industry and with our members if possible.
Well, I mean, I know credit unions are looking to use the coolest, latest things, at least most of them are, ones that are proven, obviously, to get that younger member, to get more members, to make their institution more modern, more attractive, all the bells and whistles, all the buzzwords that we use there. And so a lot of these fintechs are the answer or might be the answer to attract those folks. So again, I guess we've got to go back to the vendor due diligence aspect of it.
What are they providing? How are they providing that service and partnering with us? Could I replace them? What's the impact if they were to disappear or go out of business or Synapse declare bankruptcy? You go through those basic questions, but we got to go through them with a better understanding of what the businesses are. We're no longer in that mode where we're only signing up with big enterprise businesses or ones that were offered, through our cores, because really the innovation is spread out much broader in our industry these days. And there's a lot of good opportunities and tons of good fintechs to work with. So I wouldn't want some news like Synapse to stop those conversations to happening, but we need to understand at least how they function and why Synapse is different than many of the fintechs we're working with in our industry.
Well said. I was going to say the exact same thing. So good stuff. Alrighty, sir. Well, anything else here? Any other takeaways or any other insights you want to share before I let you get back to work? Because I know you guys at Janusea, you guys are busy these days. And that's a good thing.
We are busy. I think we have something like it's 15 fintechs we're working with across the industry, and it's 100 plus institutions using our code. I think on their platform alone, we're up in the 30 some range of institutions that are using us as integration partners. And so, we're having a great time. Just keep the innovation happening as long as it's for our members' benefits and it's done in a safe and secure way. That's kind of the message for today.
Yeah. And the Synapse situation is definitely, I don't want to say it's an awakening or a wake-up call, but it's definitely something to open your eyes and go, oh, okay, well, let's double check. Let's, cross our T's, dot our I's, that type of stuff.
Yeah, and if an examiner brings it up, say, I'm familiar with it. That's a situation that had these risks. We work with partners like this, which is a different risk profile. It's amazing how quickly responding with some understanding and a direction in your policy of who you work with, it can kind of quiet those initial concerns and the problems that we have in working with regulatory bodies and our examiners on site.
And always be aware, stay ahead of that curve for sure. Alrighty, sir. Well, I'm gonna let you get back to work. Kyle Stutzman, everybody from Janusea, doing some really cool stuff and sharing some very important insights here. So well done, sir. Good job.
Thanks. Have a good day.
A quick word from our sponsor, Community Financial's President CEO Tansley Stern's new podcast, Despite Impossible.